Welcome back everyone to another video here with Invest for Tomorrow, and we're going to jump in here to NIO Inc. But before we do, I do want every single investor and viewer to be aware that I've created a second YouTube channel where I will do shorts. So I will do due diligence and research on certain ticker symbols. I'm going to make their videos 5 minutes or less, and then on top of that, we're going to make shorts, so 30 seconds to a minute and a half, explaining everything in those 5-minute videos, telling everyone the due diligence and research, and a brief summary so that everyone can get their due diligence quick, brief, and simple. And if you like short and simple videos, this will be one of those channels you will like very much. Thank you to all of you guys that have already joined. We're having issues with the link in the descriptions down below, so if you're not on my Twitter, I highly recommend clicking on the Twitter link and you will see it as my most recent tweet. So go ahead, check it out, and I look forward to all the stuff and the projects that I have planned for this channel. So it's basically going to be short, brief videos, 5 minutes or less, and then on top of that, shorts from 30 seconds to a minute and a half so that everyone can receive the research and due diligence right up front. You guys as investors do some further digging to make a rational decision based off of everything that you find. So let's jump over here to NIO. So NIO Inc. has had a jump and it's pulling right back down. Me personally, if this breaks through these lows here, we really want to watch this carefully, which is $31.90, basically $32. If that gets broken through, we want to look at the history of the chart, and the next point of reference would be down here at closer to $30, and then all the way down here at 26, and then we have down here 25. Those were numbers we used to remember. I don't know if you guys remember my older videos on this pullback. We looked at those numbers. They were very important back then. They're just as important right now, especially since we've broken through some lows here that were important up here at $38. Now, the stock is really pushing hard to stay up, so we can really see that in the market overall. Tomorrow's a big day for the market when it comes to bonds and purchasing and stuff, and we have a lot of different days going into the week that are important that we want to watch for. So right now NIO has taken a beating, and if it breaks through $32, I'm just rounding it up, it's going to be very important to watch that carefully. So what's our support and resistance based off of today's price movement? So the 50-day moving average is 36.92. Anything below 36.92 is bearish. Anything above it is bullish. I do want every single investor and viewer to be aware of that, and we want to keep that in mind. Now, our support down here is 34.43. If that gets broken through, we need to watch this carefully. And then our next support is down here at 32, and then obviously $32 because I'm rounding up $31.98. So you definitely want to look at that $32 range if our support gets broken through up here. But before even looking at any of those numbers, we want to pay close attention to the support. Now, if that support could be used and the bulls can use it as momentum, as we can see, they've already built some momentum here and it's sitting at 35.15. Their next point of reference to breakthrough is honestly the 50-day moving average. So they can get back into bullish territory, 36.92. They definitely want to turn that into a support and pull upwards. Now, there will be a midway point that you would like to watch, and that's right here at this point, 36.27, or even up here at 36.59, 56 give or take. So you can look at these points of reference here. They're optional to kind of dissect the chart, but they don't guarantee that the bulls are getting back into bullish territory unless they break through the 50-day moving average, and that's why 36.92 is pretty important. Now, if that is accomplished, the resistance level, which is the highest point before this downward trend and where the bulls tried to break through the 50-day moving average, is up here at 38.68. That's the true point that the bulls want to break through to reach newer highs and new resistance levels. As always, if you found this video helpful and informative, all I ask in return is for you to smash that like button to let me know you watch this video. Stay tuned to the very end. We have a lot to uncover and discuss about the S&P 500 index, 10-year treasury, and if you learned something new, go ahead, hit that subscribe button. Don't forget to click on the bell, and share this with your friends and community. Stay tuned for all the information that we have to cover on the S&P 500 and the forward outlook. So for everyone that has stayed to this point in the video, all I ask is for you guys to hang on tight for one more minute, because I'm going to show a short clip of a previous video that I talked about when we started to see signs of this going downwards. I want us to pay close attention to these peaks, and the drawing might not be the same, but it's going in the same direction. Now we need to watch the market carefully, and I'm going to share with you guys after that short clip how I feel about this and what we need to look for, and also the 10-year treasury, how it's doing. Stay tuned, and all I ask for in return is for you to hit that like button to let me know you watch this video. 39.50, and it's been going down since. So one thing I want us to pay close attention to is if the market continues to build this behavior. This is the behavior that I'm seeing, right? If it continues this, and we're hitting newer lows, and it continues to hit these peaks, right? Then the market is struggling to hold itself up because the repurchase agreements of these dates do not exist right now. And a lot of people don't realize how much of an impact the Federal Reserve's decisions has on the overall market. Like, the only reason why the market's been pushing up higher, it's all the forward outlook and hope, but it's these dates. These dates hold up the market from going any lower or from staying stagnant. It keeps on pushing it. It keeps on creating anticipation, excitement, the speculation and the hope of seeing ticker symbols going up. So I didn't really want to make this video, and I didn't want to have to, but I need to make every single investor and viewer aware that we might be in the middle of a crash or correction already getting started. See that those are the peaks, and we've been going in a downward direction. The drawing is not meant to be exactly the same, but you could see we're going in that direction. Now, the other thing I want to mention is the treasury yield, right? The 10-year treasury. It's been spiking up. In the last month, it's gone up from 1.1 all the way to 1.6. And from last week, or if we put here the 5-day, you could see this was sitting at around 1.55. It jumped up to 1.59, hit 1.60, and now fell itself back down, and now it's sitting at 1.6. This at some point may not correlate anymore with the market, but for right now, it's definitely causing some type of surprise to the market. The market is actually feeling it and going downwards pretty quickly every time this goes higher. There will be a point where the detachment of the correlation will happen, and the stock market will start to go back up on its own, hopefully sooner than later, because the treasury yield will actually become a norm to see itself at those levels. It's just that it's going up way too fast in such a short period of time. That's what's surprising the market. The other thing too is inflation year over year, which we need to keep in mind and pay close attention to, because the Federal Reserve is going to have a meeting next week on the 16th and 17th. So stay tuned for that. As always, guys, I hope you guys learned something new. I'm not here to encourage or discourage anyone from the market or encouraging them to buy, sell, or hold any positions. But I do want to say that this is the biggest opportunities, because the beginning of a bull run is on the way down. And I'm going to share with you guys later on this week what I mean by that, so you guys could see what is it that I mean when the beginning of a bull run is when the stock market is going down. It's really hard to time the bottom, but this is the time to find stocks you like, you understand, and prepare yourself and position yourself based off of your due diligence and research to make a rational decision as an investor. As always, guys, once again, hope you guys learned something new. Share this with your friends and community. Thank you guys so much for watching, and let's make some money.